Okay, happy Friday and good morning to everyone. Welcome back to our Friday morning market outlook session. We have a lot to cover with you this morning because there is quite a bit of volatility in the markets, and markets are hanging in there with the technology, the NASDAQ 100 index, just barely hanging on to some support levels. Most of the major technology stocks seeing a bit of weakness, but starting to see some support levels here. So we want to go over all of those things and talk a little bit about what our outlook is for the markets. Now, before we get started, what we're going to discuss here today is purely for education and demonstration purposes. It is not a solicitation or recommendation to buy or sell any specific securities. So, like I said, if we look at the major indices, especially the technology NASDAQ 100, it is just hanging on by a thread. Today is quadruple witching hour, which you have multiple futures, index futures, stock options that are all expiring on the same day. Normally, a lot of investors believe that there's more volatility on these days, but historically, there's less volatility on these days. So I don't necessarily expect a whole lot here in terms of price action today, but what we do want to look at is next week what our expectation is. So we'll take a look at the major indices where they currently sit. We'll look at volatility and where the current commodities that are moving are relevant to pay attention to. And then I want to talk a little bit about the economic and mobility metrics that we're currently paying attention to, because similar to the market, we're getting a lot of mixed signals from economic numbers. So I want to point them out so that you understand what we're paying attention to. And then today, what I want to spend a little bit of time on are the FAANG names and the sectors, because the FAANG names predominantly driving the NASDAQ 100 index. So it's important for us to look at each individual name and where they currently sit. And at the very end, if I have a few minutes, I'll try to answer any questions. So let's go ahead and get started. But the primary question that I want to help investors answer is, really, are we watching the calm before the storm? A lot of investors currently feel that there's more downside here in the markets, but markets have been stubbornly resilient, if you will. So the question is this a bottom and that we're going to continue to grind our way higher? Or is this just a bit of a calm before we see an acceleration to the downside? And if anyone have, again, I just want to do a quick poll. How many of you feel that the markets are going to continue to move lower? Please type D into the chat window. And how many of you think it's going to keep moving higher? Please type H into the chat window, just to get a sense for everyone's consensus. So it looks like, there's a fair amount of people who now believe that markets are going to move lower. I would say a little bit more here than over the past few days. So certainly consensus growing a little bit more towards to the bearish side. Now, my name is Tony Zhang. I'm the chief strategist here at OptionsPlay. What I want to share with you are my technical charts, the economic research that I'm paying attention to, and the ideas that we currently are looking at here in the markets. So starting off the NASDAQ 100 index, or the QQQ. We've been talking about this index for pretty much since that explosion in volatility downside, with the 270 level in mind as a major support level. Now, the 270 level has held predominantly fairly well. Despite continuing to make lower lows, it has made intraday moves below that 270 level, but there have always been buyers stepping in towards the end of the day that push the index back above that 270 level. But the more times we test this level, the weaker those buyers may get, and that is potentially the outcome that we might get, which is another move to the downside to that 250 level. But like I said, right now, the Q is still hanging in by a thread. There are, for me, what's more and more concerning is really the fact that any gains that we have seen in these indices have all been happening overnight. Once we get into the trading sessions, there's more sellers than buyers. That is concerning to me. If you look at the price action, it's not particularly strong. It is getting stronger over the past few days. Intraday, we haven't seen as many sellers step in and buyers stepping in fairly quickly. But this is really where it's a very, very mixed tone, and that 270 level, 270 is a major line in the sand for me to watch, because if we get a close below the 270 level, that puts me in a much more bearish tone. Right now, I'm still in a much more neutral tone at the moment, as long as the Q stays above that 270 level. If we look at the S&P, the S&P has managed to settle back below that 339 high from the February highs. So we've had that recent move. came back to retest that level of support. It's broken that support level, but it has found some support here. So it hasn't broken those support levels either, but if a break below that support level, in my opinion, would bring us back to that 323 level, which was a major resistance level that we put in back here on June 5th. So a little bit of downside here on the S&P, a little bit more downside here for the Qs. So to give us a better understanding as to what our expectation is, I do want to take a look at the individual names, the dominant names in this sector, to give us a better understanding as to how we might be moving forward. If we look at small caps continue to provide defense. So as the NASDAQ and S&P continue to weaken, slowly day by day, the small caps have basically started to continue to grind higher. So you're seeing defense from small caps. Now, I don't think this is a turnaround here for small caps. I don't think all of a sudden you're just going to start seeing small caps rally. I think small caps is just because of the fact they didn't rally as far. They're also not falling as far. And you see the same thing here for the equal weight indices. So a bit of rotation here from the mega cap names into the smaller cap names. However, this is likely, in my opinion, temporary. I don't think this is a shift in the flow of funds here from large cap to small cap. I think this is just, again, some bleeding off of the momentum here in the mega cap names and seeing some defense from the small cap names. Now, if we look at volatility, so the VIX 3-month versus VIX ratio, which we follow very heavily here, it's still very much in a risk-on environment. The current ratio is at 1.17, well above the 1 level, which is when we consider markets are stressed, and well below the 1.25 level, which is where markets are complacent and you have a higher probability of a sell-off. Now, that doesn't mean markets can't sell off when it's at this level. It very well can. So just be aware of that. I'm not saying that because of this, markets are going to continue moving higher. It's just that the volatility indexes are not showing us that markets are particularly fearful of the current market conditions, but that can change on a dime fairly quickly, as we saw here, whereas trading at about 1.7, 1.15, and it quickly fell below 1 within just a few trading days. So risk on, but very neutral, if you will, from that perspective. Volatility in itself remains very elevated. This is some of the concerns that we do see about further downside here with the markets. We have seen upticks here in the VXN, which is the NASDAQ 100 volatility index, currently trading at 36, which is well above that 17, 18 level that we had back in February. These are some pretty high levels here. So right now, these are some concerns that we have here for the markets, is the fact that volatility remains fairly elevated. That does provide better opportunities to sell premium. So for those of you that are long stocks, consider selling cover calls, selling premium. If you're bearish on the market, sell call credit spreads. If you have some bullish stocks that you like, sell some put credit spreads. You're going to collect elevated premium. Now is the time to go about doing that. So keep that in mind. When we look at the put call ratio, this is another ratio. This is another indicator that we look at for complacency of the markets. We really see the put call ratio starting to reverse higher here. So this is the 20-day put call ratio. This is 20-week put call ratio. We've seen a significant uptick in the put call ratios, meaning not as skewed, high number of calls being traded versus puts. At 0.7, it is certainly historically skewed more to the call side, but not as extreme as we have seen over the past few months or so, where we've seen excessive amounts of call buying. We're not seeing that at the moment. It is returning back to more normal numbers that we're seeing. So complacency not as there. So that does provide potential more upside here for the markets. Now, when we look at crude, this is really where we've seen a significant rally here in crude over the past few days. We've seen energy stocks rally as a result of it. And the question is, whether or not this rally can continue. Most of this rally was due to low inventories rather than any type of pickup in demand. And I just want to point out the weekly chart here. Notice how on the weekly chart, it is still well below this 42.5 level. So we are still well below some major resistance levels here on oil. And I think this is really the concern that I have, is that oil will likely continue to trade sideways and potentially roll over. So from the energy sector, I'm still not, convinced that this is a turnaround here for the energy sector. If anything, I think that this strength that we've seen in energy and crude is a rally to sell into, sell call credit spreads on those types of names. those are the types of strategies that I would be taking a look at. One thing I did want to point out here is the Dow Jones Transportation Index back at its all-time high. As you can see, this was put in back in September of 2018, just about to break out above that high here. Hasn't cracked above it. It peaked above it earlier this week, but has pulled back here. And I think this is one of the indices that has a potential for a big breakout here. Transportation doing well makes a lot of sense as to what's currently happening here in the markets with freight and just consumer spending is still remaining fairly elevated. And you have transportation stocks like everything from JB Hunt to FedEx to all of these names that are just doing incredibly well as a result of the lack of air travel and the freight industry as a result of this getting a tailwind. So transportation, certainly one of the indices, one of the sectors that I'm paying attention to that's also aligns with our CSX long daily play here for this morning is because of this strength that we're currently seeing from transportation that we're looking will likely continue. When we look at the energy sector, this is what I was referring to here in the crude. As you can see, what we had is a breakdown below this major support level on the daily chart. It's now come back to test that level as resistance, and that is the opportunity that I see to potentially look for a short here. Now, you can play this two ways. My preference with the elevated implied volatility is to sell a call credit spread. You can do this on the individual names, but I would stick to the very, very big names like Chevron, ConocoPhillips, ExxonMobil, or do it on the XLE, the ETF itself. I would stay away from the smaller cap names just because of liquidity reasons. You want to stay in the very, very big names to play for a downside move here in energy. Now, when we look at the economic numbers, very similar to the broader market, it is a mixed bag of pictures. It's a mixed bag because what we did see from over the past few weeks is that mobility started to increase a little, but we're starting to see this kind of flatten out again. It's moderating again. So air travel, first of all, as you can see, still remains in this range, and it's actually been in this range pretty much since late June. So we started to see a bit of an uptick here over the past couple of weeks, but as you can see, that started to reverse lower here again. So we're not seeing the uptick in air travel, even from the leisure travels without corporate travel at all. Leisure travel predominantly here has stalled. If we look at our economic recovery indicators, so over the past, we've noticed that over the past few months, it pretty much was flat until the past few weeks when it started to accelerate a bit to the upside. We also noted some of the stuff with dining. If you look at open table real-time tracking of dining seats, that started to accelerate to the upside. We're starting to see that stall a little bit here as well. And someone brought up a good point, it's because school started, and that could be some of that. So, the thing about these numbers is that there's always some nuances to understand that sometimes there are very seasonal factors that come into play. For example, if you look at housing numbers, we saw housing numbers starts to dip. Is that a correction here in housing? And I don't think so. It's partially because we had two major hurricanes that did disrupt housing starts. So there are always nuances to these types of economic indicators to pay attention to. So good point as far as school starting. But we have seen the mobility tracker start to reverse in direction here. So the recovery that we're currently looking at, real-time indicators of recovery, starting to moderate and stall a little. If we look at consumer confidence, also stalling a little bit. We've noted that consumer confidence had a recent uptick after stalling for a few weeks or so, and we've just had now another week of a stall. But again, this is just 1 week, so 1 week is not enough to make a trend. This could easily continue higher or start to reverse lower, but this is just showing you that the data is starting to show a little bit of stalling of some of these real-time indicators that we track to give us a better sense for the economic recovery. When we look at employment claims, the weekly employment claims from states did see a decline below 1 million, but the number of unemployed, number of people still claiming unemployment is still stubbornly high. It's still just shy of the 30 million number. So Employment not looking particularly strong, despite the fact that, you know, the headline numbers of the number of jobs that we've added, the percentage of unemployed, headlines looking fairly strong. I think the Fed also provided us with a bit of a sobering picture earlier this week as to just, you know, what their expectation is in terms of unemployment and for the next 2 to 3 years, and that's why they've dedicated the next 2 to 3 years to zero interest rates to make sure that they do everything they can to support the economy. You know, even the Fed has admitted that one of the reasons that the unemployment rate has gone down so much is really due to the fact that there are so many people who have left the job force or simply no longer seeking work, and that has an effect on unemployment rates as well. So these are all things that you really have to consider when you're looking at some of these headline numbers. There are many nuances to them. So we want to try to make sure that you understand those nuances when you're reading these types of numbers. So in order to do that, I think what we want to do is we want to take a look at, you know, the major FAANG names, especially if we're mostly looking at the NASDAQ 100 index and looking at that 270 level and asking ourselves, is that level going to hold or is it going to break and start to move lower? I think it makes sense to take a look at the FAANG names to give us a better sense for where that outlook might be. So if we start off with Apple, which is by far the largest by market cap, this is actually the one that I think is most precarious. Apple is just hanging on to that 110 level. Now, if we look at this, this looks like a very you know, standard topping formation that we typically see that could cause a breakdown here. And I think the move to the downside is pretty significant, down to about that $95 level, which would fill the gap down here to the $95 level. It's hanging on to that 110 level, but this is the one that I see that's at risk, in my opinion, the most out of all the FAANG names. And there's a big gap here to the downside, and that could very easily translate to the Qs moving down from 270 down to 250. We're going to keep an eye out on this, but the 110 level still holding. It's opening up a little higher than that 110 level, but price action hasn't been particularly strong, but this is one that we're going to be paying attention to next week. If we look at Facebook, Facebook is one that is not, you know, certainly had some of the, was one of the weakest names this week, but it did manage to tag that 250 level yesterday, bounce off of it, which, as you can see, has been a bit of a support or resistance level here. Now, if the 250 level breaks below, you know, this puts it down into the 220 range to the downside. So it is holding that support level. It has actually reached that support level. It's actually bounced off of that support level. Facebook, I think, about to open up here this morning at about 260 or so. So we'll see whether or not Facebook holds this 250 level, but Facebook certainly reaching that support level and finding some support and bouncing off of that support. So not as weak, in my opinion, as Apple. If we look at Amazon, Amazon also had a gap down, which is generally speaking not a particularly strong indicator. We gapped down below that $3,100 level. It did seem to find a little, you know, the next support level here is around $2,990 or so. So, you know, I think that Amazon is going to be more neutral in this $2,900, $3,100 level. And we'll really have to see as to how it responds within that level, because if it breaks down below that level, that's really where we see some significant moves to the downside, down to about 2,500 or so. There's not a lot of trading here in this particular area. So I would expect that if it broke down below that level, it would resume down to the $2,500 level fairly quickly. Now that would possibly put the NASDAQ 100 index in a pretty significant move to the downside. And as you can see here on Amazon, the momentum in the index looking fairly weak, relative money flow looking also relatively weak here. So Amazon here is one of the names that I think is at risk. When we look at Netflix, much more similar story to Facebook. You know, you have some major support here around this 450, 470 areas, providing that support here. So it's finding some new support here around that 470 area. If you look at the weekly chart is starting to break below the 20-week moving average. This is, in my opinion, potentially bearish down to the 420 area, which is right here, this line down here, the 419 level. So if we break below this 470 level, we're expecting a move down here to about the 420. So as you can clearly see, right now what we've seen is that all of these major names have now either touch their support levels or just hanging on to their support levels by a thread. That doesn't mean they're going to break those levels. It could, this could be the temporary bottom and markets start to grind its way higher again. But if we do break below, there are some significant downside risks to the downside here. So these are the things that I'm paying attention to right now. If we look at Google, Google also gapping down just like Amazon here over the past few days, but Google also finding some support level here around this 1450 level, providing some support. And so multiple major support levels being found on some of these major names. So you have names like Amazon and Apple looking a little weaker, but then you have Facebook, Google, Netflix looking a little stronger in terms of finding some support. So perhaps you get a little bit of rotation here and the Qs kind of hang on to that 270 level. That's also possible, but there certainly are some downside risks again for many of these names. And lastly, if we look at Tesla, Tesla's not in the FAANG names, but certainly one of the large drivers of the NASDAQ 100 index. Right now, from what I can see, you have these major waves higher, and this certainly looks like the signs of an exhaustion last wave higher. It just happens to tag the 500 level. We've had a major move to the downside, and it's fairly volatile right here, but I really feel that this is starting to lose steam, and the upside here is fairly limited here for a name like Tesla. And you have this triangle starting to form here on Tesla. And when you have this type of triangle, it will either break out one way or another. If we look at all of the other technology names, if you look at all the FAANG names, if you ask me, I would say that it's more likely it's going to break to the downside. It's hard to bet against Tesla. A lot of people continue to bet that Tesla will continue to move higher here. And certainly out of all of the tech names, certainly one of the ones that have seen some of the strongest bounce off of those support levels from, Apple. None of the other names saw this type of bounce. Tesla opening up significantly higher here than most of the other names. So Tesla is still remaining fairly strong. So I would say out of all the tech names, Tesla remains the strongest, but limited upside, just like many of the other names. So with that, that covers what I wanted to share with you here today. A lot to keep an eye out for. Like I said, many major support levels just about to be tested today and next week. Pay attention to them, because if you break below those, we're likely going to see some more downside, especially from the technology names. Next week, what we'll do is we'll do a full sector review, because we do see some rotation out of tech into materials and industrials. Those are some of the sectors that we're starting to pay attention to. So until markets break below those support levels, we're not taking as many bearish positions. We're looking at some bearish positions, but until they break those levels, we're not taking them. We're more in the process of selling premium, collecting premium while they're elevated, and looking at where markets are rotating into. We've seen some significant moves into materials and industrials and transportation. So those are the places that I'm going to be looking at to sell some premium on the long side. So thank you so much, everyone, for supporting us and allowing us to continue doing this. I hope that you guys find this useful, and especially to our members that support us and allow us to continue doing this every single week, so that you guys can have a better understanding as to how we're viewing the markets. So with that, what I do is I have a few minutes to try to answer a couple of questions. Tim is saying, I did not get a fill on the Facebook trade yesterday. Do you still like the trade? And if we adjust it to the 265, 285 vertical. So Facebook's about to open up around this 260 level. 265, 285, I certainly think is a reasonable strike price. You're basically moving it down by about $5. I think that's reasonable as long as Facebook stays below this 262, 263 level here today. I think that is a good adjustment to that particular trade. Is an increasing bearish sentiment actually bullish? That's a very good point. So certainly we can look at the fact that if more and more investors are bearish, you can use that as a contrarian indicator to say that we have now found support. And again, this is my thesis. My thesis has not changed over the past few weeks, which is the fact that as a result of the, when we look at the NASDAQ 100 index, my thesis from the day that we had that sell-off was the fact that this sell-off was driven mostly due to market maker delta hedging. This wasn't due to because investors were selling their stocks necessarily, or a sudden fundamental shift in the markets. So that's why my belief was that this sell-off was going to be contained, and that's largely what we have seen here over the past few weeks. Now if there's more and more growing bearish sentiment, that could be the contrarian indicator that the market needs to start looking at that move higher. But again, I will admit that price action here over the past few weeks has been particularly weak. If you look at the intraday price action, it's almost always the case where we open up higher and then markets sell off to push to new lows. You get some buying, gets it back to kind of that break-even point, and then pushes lower and gets back to break-even. But markets have been, the price action is not particularly strong, or shows me that there is a bottoming formation happening here. We're not seeing the reaction from buyers as strongly as we are seeing a lot of selling intraday. So that is my worry, that that we do see a break below that 270 level, but I'm not going to go short until we actually get that break below that 270 level. And Jim is saying jobs have not been added, at most they have been refilled. Absolutely, Jim. So that's what I was saying before, that the number of unemployed have remained stubbornly high at about 30 million unemployed. That number has not moved much in the past few months. And benefits will run out too. Absolutely. That is certainly going to take a hit on consumer confidence. We've already started to see consumer confidence numbers, as we showed you today, stall out. The question is whether it's going to reverse lower. If we start to see consumer confidence reverse lower, that I think is a major signal for the market to potentially start moving lower. FAANG and names seem to be dragging the market averages down. Individual names are not all weak. That's correct. So, it's really just the FAANG names that are dragging the markets lower here. So that's why we wanted to take a look at the FAANG names and see what our views here for FAANG, because if we feel that most of the FAANG names have found support, then that could be supportive of the Qs holding that 270 level and starting to grind its way higher, or maybe at least no longer continuing to move lower. I have not seen, Facebook breaking down below those support levels yesterday, Amazon breaking below, Google breaking down below. Those are some weaknesses out of these names that could continue to accelerate to the downside. So there are risks to the downside. Your take on Microsoft. Microsoft has been also particularly weak, but similar to some of the other stocks, finding some support level around this 200 level here. Is this going to break this 200 level and break lower here? That's always possible, and that's really what I'm watching these FAANG names for, because if major breakdowns of any of these levels would certainly drag the QQQ lower. Why do you use Chaikin money flow? I use Chaikin money flow as a way to gauge the breadth of the stock. So momentum indicator gives me a sense for where momentum is, and breadth gives me a sense for how much volume is traded, whether it's bullish or bearish volume. Because sometimes you could have a big, big up day on little volume, and that's less significant than you have a big update on strong volume. So money flow kind of accounts for that volume flow into big moves up or down. Dr. Copper seems to be indicating that this expansion is not over. That's absolutely true. This is one that we've been looking at for quite some time. Copper, if we look at copper, continues to, copper, the momentum here has stalled a bit here on copper, as you can see, as it continues to make higher highs. It is no longer continuing to make higher highs on momentum. But, at the end of the day, copper did make a new 2-year high here above that $3 level, which has been a major level for quite some time. We've got that breakout here. So could it continue up to that 323 level? When you look at the amount of demand for copper from housing, from electric cars, from all the goods, the consumer electronic goods that we are now consuming more and more of, this is supportive of copper continuing to move higher. And that is many times a real-time indicator of industrial demand. So I don't disagree with you at all. This is something that we have brought up here on the moves here in copper. If we look at gold and silver, yeah, gold and silver has been pretty quiet over the past few weeks, really kind of consolidating here for a while. The question is, does this break out higher or does this break out lower? If we look at the dollar index, it's not particularly strong here for a breakout higher. I would say that, a few days ago, I was asked the same question, and my answer was that I think there's a higher likelihood that this breaks down to the downside, but it has held in pretty well here over the past few weeks, both gold and silver. I really don't, with interest rates the way they are now, if we look at 10-year yields now stabilizing in that 66 basis point range, this does certainly put more support here for both gold and silver to break out higher from the range. We have seen interest rates stall on that move higher, so I do believe that we can potentially see a move higher on gold and silver. Do you recommend closing debit spreads on tech stocks? So I really think it depends on what your debit spread looks like, whether it's a bullish or bearish debit spread. I'm going to need a little bit more information. Have you ever considered offering auto trade, both entering and exit? Michael, we've thought about it. It's not something that I think we're going to be offering in the near future. It is something that we are considering, but not something that we plan on doing that at the moment. So thank you so much. It's 9:30. Looks like markets just opened here. We will send you the recording with the slides as soon as we finish processing them. Thank you so much. I hope that you guys find this useful in helping you start out your day and understanding where to position, where to look for outlooks here for the markets. Have a great day, and I'll see you guys next week.